Hey, welcome. It is December 15th, 1 p.m. We just got the closing bell. We were talking about how we were hitting the top and we might go a little choppy today. So let's see how we actually performed during the day. So S&P went down a little bit before evening out and then trading back up towards the previous day open. Didn't quite get there. And then we mostly leveled off and came back down. And the last few minutes, we tried to rally. We ran into this purple line and then traded down, back down into a close. So this is going to be relatively flat to where we opened, but also down on the day. So in S&P 500, there we go. We can see that we are clearly a downward movement today where we open, where we close very similar places below the previous day low, although the high was above the previous day low. But this is definitely a movement downwards. This is the beginning of a pullback. This is definitely not sideways movement. So that's really interesting to note. It's the first time really we've got a real indication of downward movement. It could be the beginning of pullback, but we'll see what happens over the weekend. It might be a little too early to call it. If we take the look at TLT, TLT traded flat to yesterday, up 0.12%. So that low is above that MA200. So that is interesting. So we'll want to watch for another day on Monday if that low remains above that MA200, and then to see if we're just going to chop sideways. That doesn't necessarily mean that we're up. We could chop sideways. If there is a low below that MA200, then we will see if we start to get a pullback in that TLT. And take a look at QQQ. QQQ is stronger than the S&P for sure. It actually went up 0.39%, but it was down yesterday a little bit. So it's showing more strength than the S&P. So people are going into risk assets, and that could be the effect that we talk about, where the fund managers who are behind on the S&P and who got this part of the movement wrong and were counting on it to pull back from here, they're having to play catch up. So their best bet is the riskier assets. Let's see if that carried over to small caps. Small caps mostly sideways, down on the day for sure, but it's the size of these bars are basically exact same. They're just different colors from each other. So not too much action or excitement in the small cap stocks. Let's look at our Dow Jones Industrial. So Dow down 0.2%. This is the one that we identified as more extreme. So you can see that there is a definite downward curvature right here. This is a little bit more sideways than the S&P 500 was, but at least there is that movement downwards. There's that downward slope inside the price action. We really should see the Dow Jones coming back to its Keltner channel right here, +3 Keltner channel, and then from there, most likely, if it comes down to the Keltner channel, then we'll probably keep on moving down, at least to the +1 ATR Keltner channel or the EMA 20. Otherwise, if we hit the Keltner channel by trading sideways, then we could get more of what we saw right here. But I would expect it to, even if we went sideways, it would consolidate for a while and then touch the +1 ATR and maybe go even further. So we've just ended the first half of December. We only have 2 weeks left in December to trade, maybe and part of a week going into the New Year's. But in any case, the markets are going to get quieter and quieter as more people either prepare for breaks or vacations or actually go on break and vacation. So the schools are closing next week. Some children are out on Fridays, some children are out on Wednesdays, some children have half days. It just depends on what school district they're in. But families and traders are going to start focusing more on their families and time off with their families. So we're going to expect thinner markets than we've seen, even though we've seen some pretty thin markets the last couple of weeks. So today's volume is above the average, but again, that moving average came down a little bit because of all of this low volume trading over here. And we can expect more of that. So we can't, the way that we should trade going into the end of the year is short term. Take advantage because there is potential for gappy moves. So take advantage of short-term gaps, sort of like, where did we see it? We saw it in Marvell. Okay, so gap up, surge upward, gap up. Another, well, that one's not a gap, but a gap right here, sort of a gap right here. We will start to see more gappy moves like this in the next 2 weeks. So a really great way to take advantage of that is to just trade those gaps, the potential for those gaps. So it could go against you as well. If you thought that we would bounce up from here and then you suddenly gap down, that can go against you as well. So you want to make sure that you have really good reward to risk ratio trades on these overnight gap trades, and just make sure that your potential is, so you want to choose the deltas, the lower deltas, where I'm risking a sort of fixed amount, even if it goes to zero, and it most likely won't in a single day, but you might lose 50, 60, 70% in a single day. And so you want to have that potential for a gap up that will give you a 100+% gain because of that 70% chance of going down. So single day trades, 2-3 day holds, 4-day holds maximum over the next couple of weeks. Otherwise, you're going to watch your account flip-flop back and forth unless it gets really directional. But we're not really expecting the markets to go really directional over the next couple of weeks, maybe chopping sideways, or if we do get that pullback, then we could see a directional move to the downside. Not really expecting a directional move to the upside for a lot of reasons that we've covered before, but we're pretty close to resistance. We could go higher up to this resistance, and then we'll see. Most part because of the less part, we need to start preserving our P&L for the end of the year in terms of institutional and professional traders. We're going to start taking less risk unless you are just way, way, way behind to the point where, well, if I'm even more behind, it doesn't, I'm already so deep, so far behind the S&P 500, I might as well take some big swings and see if I can get a few home runs to sort of catch up a little bit. But if I lose, then I'm already super behind anyways. That would be the attitude of institutional traders. The ones who have been doing well, they're going to preserve their capital and they just preserve their positions. They say, okay, this is great. Let's just cruise into the end of the year and just make sure we preserve our performance. So it's going to be a little tricky if you're trying to hold positions over the next 2 weeks and into the new year. So any new trades that I start putting on from today all the way into the end of the year, they're going to be very short-term focused, no more than 3 or 4 day holds. Okay, I think that covers it. You have the weekend. If you hedged yourself today and didn't go crazy on your positions, then you're probably okay. You can see that we went way down. That was a little bit of a bear trap, and then we chopped upwards, and then we came way back down again. And then this was a bear trap right here, and then went back up. This is a bull trap. This is the end. The last 10 minutes was a classic bull trap. There's like, hey, let's drive this up into the close, and oftentimes it does. So like yesterday, the last couple minutes drove upwards, a sudden surge upwards, and up here, a sudden surge upwards. And not really right there that day. So there's surge upwards towards the end right there. A lot of times at the end of the day, we have a tendency to get really directional in the last 10 minutes or so. And today we did that, but that was a trap. There's that strong movement upwards, and then an immediately equally strong movement downwards. So last minute trap at the end of the day right there. So hopefully you kept yourself safe and You traded very conservatively today, didn't really open any new positions because we really don't know what's going to happen over the weekend. So we'll start fresh on Monday, fresh eyes, be able to absorb all the data that came over the weekend, and then start positioning ourselves for the end of the year. That's it for today, nice and short. Have a wonderful weekend, and I will see you next week on Monday for the pre-market analysis.